we're going to be going over August 16th, 2024's price action. So that's the end of the week, Friday's price action, just in case you want to go in your charts and back test the same data. Right now I'm on Forex Replay, and I'll also be using TradingView to help us go through this. And the reason why I'm doing this is because I don't think there's one way to view the charts. I think that there's like many ways that you can approach these markets. And I think it's a very unique experience when you have different perspectives that can all actually work at the same time or not work at the same time. So this is just going to be pretty interesting. So make sure you watch the entire video and don't forget to like and subscribe. So let's get into it. So the first thing I'm going to do is mark out these supply and demand zones. So these supply and demand zones, I got these from a couple of supply and demand traders that I personally know. And the reason why I wanted to do that is because I actually used to be a supply and demand trader, and I didn't want to have any bias or I didn't want to have like my supply and demand zones that I would draw on these charts, because the zones that I would draw now are most likely going to be completely different. So this is the demand zone that they had, and the supply zone was right here. These supply and demand zones were from last week's price action. This is the 1st of August, 2024. And the whole point of supply and demand zone is to essentially look for buying opportunities in demand zones and selling opportunities in supply zones. So I asked the first supply and demand trader if he's seen any long or short opportunities and what his take on this price action was. And the first thing that he noted was that this demand zone would have been a low probability demand zone. And the reason why he says that is because, well, one, we're on the 5-minute chart, by the way. So being on the 5-minute chart, he uses the 20-minute chart to mark out his supply and demand zones. And being that we're on the 5-minute chart and we're trading really close to supply, he said that that makes this demand zone low probability. However, when watching price action, the narrative starts to change as we start doing some interesting things down here, which we're going to get into right now. So he incorporates what's called volume. Volume is an indicator that everybody could put in their charts, and it's supposed to show you the essentially buying and selling pressure of buyers and sellers in the marketplace. He also uses what's called book maps. Is it called book maps or footprint? I think it's called footprint. Yeah, he looks at footprint as well. That's just another useful tool for supply and demand traders to see what's happening at price points. Long story short, but what's interesting to me is that we went from this being a low probability long to it being one of his favorite long opportunities, and I'm going to tell you why. So he had 3 confirmations on this trade to the upside, and I asked him what the confirmations were. So the first one is this. You see this big red candle? He told me that this huge red candle has a lot of volume, and the next candle, which is this one, it should have had more volume and move lower if sellers were strong enough to push the market down. Since the sellers didn't follow through with that, it shows him that there was big buyer absorption at the low. This red candle has a lot of volume, which is what this indicator down here is showing. The next candle should have had more volume if sellers were strong enough to push the market down. So since the sellers didn't follow through with that, it shows him that there was a big buyer absorption at the low. So there's something called buyer absorption at these lows, and he's able to indicate that because of the volume. So that's, I guess, correlation with the volume, or the relationship between price action and the volume. The second confirmation is that when the sellers tried to break the low again, so this low right here, as the sellers broke this low right here, the volume dries up again. And he notes this candle as a bearish pin bar. So essentially what he's saying is there was a lot of volume on this down move. Should have continued on this, but it didn't. And then after we took this low right here with lower volume than before, like we're going down in volume and taking that low, this is indicating a reversal for this trader. And the third confirmation is that the bearish engulfing of the bearish pin bar and break of structure, creating a new trend after the sellers got exhausted. So this is indicating the sellers got exhausted. And when this green candle right here, let me zoom in. When this green candle started to trade above the open of this candle, this was his long entry. And he said that this is actually one of his favorite trades, that he would put on 10 to 15 contracts on this trade because the risk to reward is like nothing compared. The risk is like nothing compared to the reward. So what does he mean by that? Remember, if he's getting in down here, and he said that he's putting his stop loss on the bottom of this pin bar, he's targeting supply, because when you're buying using a supply and demand methodology, you're buying in demand and selling in supply. So I completely understand what he's saying. You're going to be risking this just the size of this pin bar for this entire move. And that's actually something that was really attractive to me when I did trade supply and demand. It made it really simple, to the point where it's like, okay, as long as I know what I'm looking for in these demand zones, I already have a target, right? You don't really have to break your brain over it. Now, the problem that I had when I was looking at the market this way is, number one, when we started trading into demand zones, I used to use what's called double bottom. So I would use this as like a double bottom entry, and then, retest when, same thing. Yeah, pretty much the same thing when we started trading up. The problem that I had was that even if I did get in here, there were times where I got in on this trade and the market kept tanking on me and then went into the next demand zone and then tanked on me again and kept tanking. And then, I go and look at the charts and I'm like, damn, my rule was that we were trading too close to supply anyway. So something I tried to actually do was use less risk on these trades because we're trading too close to supply, as like he noted in the beginning. So I thought it was interesting that with the relationship, he was more confident than I was, using the volume and the relationship with the candlesticks, to the point where he's willing to put the 10 and 15 contracts on. So I thought that was an interesting part of his analysis. And something else I wanted to note about that is, let's say I did get in on that long, because there has been trades where I did get in on the long, stop loss right there, and the market starts to go up. Now, this is another issue that popped up for me, was that now I'm already in profits all the way from right here to right here. I'm waiting for it to come in this supply zone, but I have no idea when it's going to actually get here. So it took a great deal of patience waiting for the move to play out. If the market was being choppy and just doing weird stuff, like it can easily just dance around right here all day and then reverse on me and take me out. Like that's happened like more times than not. Like you have no idea. It was so frustrating because you get a solid entry like that and it doesn't get to the supply. In this case, price actually starts to come down here. So supply and demand trader number 2, the way that he interpreted this price action was that we clearly have strength. So clearly having strength to supply and demand trader number 2 means that we were continuously trading higher. So this was showing strength, possibly even incorporating some form of volume profile as well in the analysis. But just by looking at the chart and seeing where we're coming from, we're moving up, 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 right? So he's naturally looking for a buying opportunity, or would like to see a buying opportunity. Now, what happens before 9:30, because he refers to everything before 9:30 as pre-market, and this is where he would do his pre-market analysis. So he sees that we have strength. We came down into the demand zone. Now remember, for supply and demand, you want to buy in demand and sell in supply. The fact that we traded through this demand zone, but traded back up into it and retraced to go test it again, this is something that he calls a false breakdown, because we broke down, but it was a false breakdown because we came back and retraced back into it. So it's a false breakdown and reclaim of the demand zone. So I thought that was interesting because, like I said, in the supply and demand trader number 1's analysis, there was so many times that these zones got traded through and reclaimed themselves, but then I fell victim to it, just trading through it again and feeling like, damn, it broke through it already. So now this is a weak zone, so I thought it was interesting that he has the confidence to see this as a long opportunity. This green candle, he said that this is a bullish pin bar, and that could be your trigger for a long entry. And if you were to get in on this pin bar, I assume the stop loss would be similar to the first trader, probably here, more conservative here, or possibly even down here. But let's say for argument's sake, it's at the nearest swing low. He would be also targeting the supply zone. Okay, I hope you guys are having fun. I hope you guys brought some extra popcorn because we are about to nerd out on these charts, man. I'm gonna give you guys an exclusive trade recap video. That's exactly what this is gonna be, because we went over the supply and demand methodology, but now I want to show you guys from a smart money perspective. So we're gonna switch. The entire language is gonna change, and we're gonna talk all things smart money. And not only that, but I'm gonna give you guys my trade recap also for Thursday, because it's gonna segue into Friday. So you guys are gonna get 2 exclusive video recaps right now on this video for staying this long and being tapped in. All I ask in exchange is if you guys could remember to hit that subscribe button. So go ahead, hit that subscribe button, like the video, and let's dive into these charts, because I'm telling you, this is going to be really interesting, and there's no turning back once I start talking about this. All right, so let's get into it. So I actually posed a question on my Instagram, and the question was, what drives stock prices up or down? And supply and demand trader number 2 actually said supply and demand, of course, right? And my response to that, I'm like, word, like I respect that angle. Now, let me ask you this. Since traditional supply and demand doesn't incorporate time, how do you determine when the move will happen? And he said, no one can predict this. Use levels and hold until your stop loss is hit or price target is reached. And I couldn't disagree more, respectfully. because that is exactly what I did on Thursday and Friday. You could say I predicted it. I don't use the word predict. I use anticipate, because we can 100% anticipate where price is going. Maybe not with supply and demand, and maybe not with traditional retail methods, but with smart money concepts, you can anticipate price movements, because we're looking at the market from an algorithmic perspective. The markets have been digital since the 70s. I think that's when it went digital. And AI has taken over damn near everything, you know. And the advantage of looking at the market from an algorithmic perspective is that we can see price signatures that are like literally telling us what's going to happen. And the only way that I have seen this not work is when I read it wrong. But I've, clearly done my due diligence, and I actually stopped trading for like over a year to study this stuff. And of course, I put together the Commas Crew, where I help people start their journey into smart money concepts to learn what I learned how to do, and what I'm still studying how to do to this day. It's just that you'll have a more accelerated learning curve, because I kind of take out the stuff that I didn't use, and I keep the stuff that I did and continue to use, right? It's like the markets are always teaching us something. But let me circle back to the point I was making. So the point that I was making is that you could definitely anticipate and or predict, whatever word you want to use, where the market is likely to draw to. And with smart money concepts, that's where the precision comes in. And the precision comes from you simply just being able to read it the right way, in which we're all human, so we're not going to read it the right way 100% of the time. But algorithms are not human, right? So there's really not that much room for error with it. The only time we see like abnormal things happen is with manual intervention. So that's gonna segue into how I'm starting this right now, actually, with the one thing that I noticed is missing from the supply and demand analysis. It was missing in mine. It's missing in other traders that I see, and it's incorporating time. So time is really the secret sauce. I mean, it's not even a secret, because everyone knows that news catalyst plays, a part in market movement, right? But how? It's like the how, why, and when. These three things are really what makes some people go crazy in these markets. And like I said, I'm gonna walk you guys through all that, like literally right now. So like I said, we're getting started. Hit that subscribe button. Let's dive into the charts. So the first thing that I look at time first. With smart money concepts, we always refer to time first, not price. So we go on to Forex Factory, and what we're going to look at is the news catalyst. The news, I'm not trying to get flagged on here for saying any weird stuff, but this is like your TV guide. This is telling you everything that's going to happen in the market. Like I want to say I swear by it, but like I just have practiced and just put the time into this so much, and I've just seen it happen every day, every week for months now. So it's really hard to disprove this, but this is exactly what I did anyway on Thursday. So I looked at the news, I seen what news events we have, and I didn't just do a glance on this. I'm specifically looking at these times. This is 8:30. We got these red folder and orange folder events, right? We got, and these are the times, like these are around the times that I trade. So if you trade like London session, you're gonna be looking, 2 a.m. and whatnot. 8:30 again. We got an orange folder here, building permits, and we got 10 o'clock. All right. So just try to remember this, because we're gonna refer to time. So 8:30. So we're on the 1 minute chart right now, by the way. Price is moving lower. Comes up. Now this is forming an algorithmic price signature called a breaker. This breaker is what indicated that we were going to go up. And with the news driver being at 8:30, this is the start of the morning session. News driver is at 8:30. I already know just off of this. I'm not looking at nothing behind. I'm literally just looking at this. And I know that at 8:30 we are going up on this news driver. What do you think I did? Got in right here. But I didn't execute a trade on this. What I did was I was reading the tape. That's what I was doing. So tape reading, I'm watching the candles form. And once I seen price right here, I'm like, okay, I'm going long. So this is bullish. Boom. See that? At 8:30, market shot up. Now everyone is thinking that it's because of what, came out on the report itself. When these news events happen, I don't care what the actual results and stuff of it is. I'm just looking to see that news in general is happening at a specific time. So I referenced 8:30 a.m. before it came, and I only knew to reference 8:30 because it's right here. And then pair that with an algorithmic price signature, the breaker, this is going up. So that's what I was reading, right? So yeah, at this point, you can ask yourself, is this a supply and demand zone? And it should be no, because it's not. This is not a supply and demand zone. Even if you see like boxes on a smart money trader's charts, it doesn't automatically mean that that's a supply and demand zone, because that goes against the way we're even viewing price action. Because in our methodology, there is no buying and selling pressure that's moving price. There's a price delivery algorithm moving price on the basis of time as its reference first, and then price. So we can look at the market through different lenses and still arrive at the same place, but it's not the same thing. It's literally not. These two candlesticks is what I'm referencing, and that's not a supply and demand zone. I think isn't this a demand zone? Hold on. I don't know. I don't even want to break my brain over it, but yeah, that's why it's so hard for me right now to even draw supply and demand zones, because we're literally looking at this. If you're a supply and demand trader, you probably can see all the supply and demand zones in here. I literally can't, because I'm not looking at price like that at all anymore. I'm looking at just these two candles and the fact that there's a news driver at 8:30. And sometimes I don't even have this on my chart, because I know I'm looking for this algorithmic price signature right here. I'm just looking for this. And I already know 8:30 is coming, because nobody can change time. Time is the only thing on these charts that nobody could fuck with, right? They could fuck with the candlesticks, right? But not time. Time is always there. 8:30 will always be 8:30. I could have set my stopwatch for this trade. And that's the type of precision that Smart Money Concepts is giving us with that lens. It's not the only lens, but I'm just explaining that it's not what people be thinking it is. And it would be actually advantageous to you if you did know at least a couple of algorithmic price signatures, because you're gonna see these things happen all the time. You know, my mentor was preaching that over and over and over, and I never got tired of hearing it because I was doing the work, going in my charts and seeing it happen every single day. So let's get back into the analysis. We can go to a we can go to a 5-minute chart that I anticipated price to move higher. Why? Because we're in a buy program. Like, as soon as I got in on that entry over here, in my lens, Smart Money lens, we're in a buy program. So I'm looking for this retracement to bring us up to the upside. But where? Not in the supply and demand zone, because I literally cannot see that. I'm going to show you what I seen. I seen liquidity getting engineered. I seen engineered liquidity. When price was right here, I knew that this was going higher, and my low-hanging fruit, which is like my closest projected target, is 5548. So let me show you where 5548 is. Right here, 5548. Right here, I knew that price would come here. Or it was likely. It was likely to come there. I don't know anything. Now, how did I come to this understanding when price is down here? There's a fair value gap here, but this is not a regular fair value gap. It is a SIBI, a sell side imbalance, buy side inefficiency, another algorithmic price signature. And what I want is for this to actually turn from being a fair value gap into an inverse fair value gap. So I don't want price to trade into here and go lower. I want it to trade higher, come back in for a retest, and push us higher. Why? Because we're in a buy program. So I guess a buy program would be the equivalent to an uptrend, is what other people would call that, right? But an uptrend doesn't incorporate time and then price how we did here, right? So that's what I wanted to see happen in here. So that's what this level is. And these are actually these are specific levels on top of that. These are not zones. So you see 5548, like this is an actual level. These boxes that you see me draw, these are actual levels that I'm referencing. 5537.50, 5535.25, which is equilibrium, and then 5532.75. Like, these are the specific levels that I'm looking at, and I'm watching the sensitivity of price when it reaches these levels. So you see this? You see how price is respecting that? Like, it's I'm not gonna say too much, but you can just see it for yourself. it's not by accident that this is happening. Like, you see that? And this is already on the chart, obviously, before this is here. You know what? I'm also, I was thinking about this, like, on the back end of this of recording this. I'm gonna show you guys how I knew where the top was gonna be too. I think that would be a good gem. All right, so, and I can show you right now because this is what I did. So, got this low, and boom, the high of this SIBI. This is how I got this 5548 level as well. This is more confluence. When I drew my fib from right here to right here. Again, this is something this is something I would put inside of the VIP, but I remember in the beginning of the video I said that I would make it, similar to that, so fuck it. This is how I knew how high we were gonna go. We're gonna go high up there, right? But first target, right there. Second target, right there. All right, this is exactly what I did. And this is called optimal trade entry. You see that blue level? This level, this level, and this level. This is called the optimal trade entry. Okay, so when price came down into here, this is where smart money is buying at. Literally buying. Like, you see these wicks? It's accumulating. So we're gonna go ahead and move ahead. And boom. We took it right there. Now, another thing I forgot to mention is that with my implied dealing range, right? I want, so anything above this line, this 5548 line that I have drawn out right here, anything above this is considered overbought. So you know the indicators that show you overbought and oversold? I'm literally seeing that with just price action and some range projections. So anything over this line is overbought. So that's why I would write something like short here. Yeah, I'm gonna have to put this actually like in the VIP too. So this level right here, 5548, it's not a random level. Like, this is exactly how I got this level. It says short right there because I'm telling myself, hey, everything above this is overbought, right? And then everything down here is a discount. So if I wanted to get in long, I'm getting in down here, pyramiding another entry right here, specifically right here, targeting right here for partials, and then what? Up here. And oh yeah, and when it reaches up, when it reaches here, I'm already gonna start looking for shorts, but I have to look at the news because the news is gonna give me time. There's nothing else happening for the rest of the day. After 8:30 was the news driver of Thursday. Everything else that's gonna happen is on Friday, right? And there's not even no red folders in the times that I trade. There is at 2 a.m. But as you can see, since nothing else is going to happen, even though I want the market to short from here, um, it's not going to happen today. It's going to happen tomorrow on Friday, right? So I'm already telling you how I knew that short opportunity was going to come on Friday, the one that you wouldn't be able to see with the supply and demand. Now, what I start to notice here is, so remember I said that we're gonna um we're gonna actually reach lower on Friday. It doesn't mean that there is no short opportunities in the day still. It just means that the shorts are gonna be manipulated. Like it's almost like gonna be delayed. But I still would take shorts because I mean they can manipulate the market, right? But I'm not just gonna do this at random places. So let me get rid of that. So we can keep these on. Told you this stuff is interesting. So I'm gonna tell you what these are. Okay. So you see these three levels that I have on the chart, right? This is sell side liquidity. This is engineered liquidity. That's what I see happening. So we're in a buy program and the algorithm is engineering liquidity under these lows. That's what I seen. So I'm like, okay. Short opportunity for me would be somewhere around here. And what would I be targeting? I would be targeting this low. So being a part of this down move, sellers are trapped here and the market is moving away from it. We're going to refer to this tomorrow. This is the AM session on Friday, August 16th, 2024. And we have the same annotations on the chart. Nothing changed. What is my bias? I'm bearish. I want to short all the way, preferably to here, right? But this is our sell side liquidity. I have that marked out already. Yeah, everything's marked out. This is exactly what I had on my chart, right? Now, the first thing that I do, I don't go in here looking for levels. I refer to time first. We're in the morning session, so we disregard all that. In the morning, looks like the only thing we have was this 8:30 a.m. Orange folder. Everything else was just, regular news. We have a building permits news event at 8:30. So that's something that I would note. And then we have a 10 a.m. orange folder events as well, consumer sentiment and inflation expectations. Again, this is actually my first time looking on this side of the screen. I never look at any of that shit. None of that shit means anything to me. I looked at that, looked at what news events were coming out and what time they were going to happen, or I physically marked them on the charts. And the thing about these news events is that you could mark them out weeks in advance. These are all scheduled. I can literally plan an entire month's worth of trading just based off of looking at the economic calendar, man. It's really that's really what helps the smart money analysis. It's that frames a lot of stuff. We need the time element to help gauge what we anticipate price to do and when. So Yeah, here we are in the morning session. We have relative equal highs right here. See, these highs are all relatively equal. That's where I get that level from. Boom, 5565.25. So remember that level. It's buy side liquidity. Relative equal highs, buy side liquidity. That's how I label that. And the same reason I labeled the relative equal lows sell side liquidity over here, I labeled that on Thursday because I knew on a later date, which is the next day, because we got these news events, what do you think I'm anticipating to happen? I'm anticipating the one of these news drivers to send us down to take out this engineered liquidity. 1, 2, 3. You see how we literally came right off of that, and boop, came down, knocked that out, knocked that sell side liquidity out. See this big downwards candle? It just went through all of that. It went through all three of them, actually. It went through all three. Now, other people are looking at this as selling pressure, I guess. But with the narrative that I broke down for you guys, you know that we are in we initiated a sell program at this point. Because why? The buy program generated liquidity on the sell side. So we had to take that out. When do we take that out? 8:30 a.m. Medium impact news driver. This is how news events can be in your favor. Instead of like gambling, just knowing that there's going to be a crazy move, I'm giving you the narrative and context on why those moves are even happening and what you could look for. You could look for the engineered liquidity for these news events to draw to, because that's the draw of liquidity, right? So that's why that went there. And also, remember, we got relative equal highs buy side liquidity here. So everyone that was going short, everyone that was going long is trapped here. Everyone that was going short was trapped down here on Thursday. So now that we took them out, where do you think I'm targeting next? Targeting buy side liquidity. And that also explains why I got out here as well. Because I was in this trade. I played the move all the way down to here. Got out. Reversed my position. And boom. So that's my breakdown. And that's the analysis. That's how I came about drawing my levels. As you can see in my entire analysis, I broke the entire Thursday and Friday down to you, and you did not see me refer to even one supply and demand zone or any other traditional retail trading pattern. This is what Smart Money Concepts allows us to see. These are algorithmic price signatures that we're looking at and referring to them at specific times. So if you want to increase your win rate, I would say, or your strike rate, I would say start incorporating time into your trading, because oftentimes, even if you look at your own trading models, right, and you don't trade Smart Money Concepts, if I was still trading supply and demand and I implemented even a little bit of a time factor, because it has none. You're just waiting for stuff to happen. You're waiting for the demand zones to get reached to. You're waiting for the supply zones to get reached to, so you can short. That it could take a lot of time. Like there's gonna be so much opportunities that you miss out on in between. But I mean, if you have a specific criteria, that's actually fine. You want to follow your trading model. So, like, um, using that analysis that my supply and demand trader friends did, like, I remember this V, and I remember like they bought the pin bar. Ain't nothing wrong with either of our entries. All of our entries, in my opinion, were good entries. Like, if you sat through this entire master's class, you just earned yourself, I don't know how long this is gonna be when I put all these videos together, but you just earned yourself some market time. So you add that onto your years, or time of experience, because you sat through this entire thing. So shout out to y'all, and don't forget to like and subscribe, and I will see you guys on the next one. I hope you guys enjoyed this. Let me know what you guys think of videos like this. If you liked it, let me know your thoughts and feedback in the comment section. I really would appreciate the feedback. See y'all on the next one.